All right, today we're diving into the latest report from insurance giant Allstate. And let me tell you, the numbers they just posted, they're not just good, they're staggering. So let's break down how on earth they did it.
Okay, let's just start with the number that has everyone on Wall Street talking. $3.7 billion. That's Allstate's net profit for just the third quarter. I mean, that is a massive figure by any standard.
Right. So that begs the big question. How does a company this huge more than triple its profit in just 1 year? Where did this incredible performance come from? Let's get into it.
Okay, first up, let's look at the headline numbers. And really, they paint a crystal clear picture of a total blockbuster quarter. So check this out. That $3.7 billion is a huge leap from the $1.1 billion they posted in the same quarter last year. We're talking more than a 200% increase. For a company of this scale, it's a dramatic turnaround, to say the least. And it wasn't just about the profit either. Their total revenue also climbed to over $17 billion. Now, a big reason for that, you've probably noticed it in your own bills. The report points directly to higher premiums on both auto and home insurance.
Okay, to really get what's going on here, we need to quickly break down the two main ways an insurance giant like Allstate actually brings in the cash. It's a really powerful two-part model. Yeah, think of it like this. Engine number one is their bread and butter, their day-to-day business, collecting premiums from all of us for our insurance policies. But then there's engine two. That's what they do with all that money before they need it to pay out claims. They invest it and generate a ton more income from a massive portfolio of assets. And this quarter, both of those engines were absolutely firing on all cylinders. All right, so let's check the vitals on that first engine, their core insurance business. And we can do that using one key metric that, honestly, tells us pretty much everything we need to know.
So in the insurance world, the combined ratio is everything. It's king. It basically answers one simple question. For every dollar you collect in premiums, how much are you spending on claims and all your other expenses? The key is anything under 100% means you're making a profit on the insurance itself. That's even before you count a single penny from your investments.
And look at Allstate's number for the quarter. 80.1%. What does that mean? It means for every dollar they collected, they only paid out about 80 cents in claims and costs. That is an incredibly healthy margin for an insurance company.
And just look at the difference a single year makes. I mean, wow. Back in Q3 of 2024, their combined ratio was over 96%. They were barely breaking even on their policies. So to drop more than 16 points in just 1 year, that's a massive, massive leap in profitability.
Okay, so what on earth drove such a huge improvement, right? How do you shave 16 points off your biggest cost metric in just a year? Well, the answer, it turns out, has a lot to do with the weather. Okay, so here's a huge piece of the puzzle. A massive drop in catastrophe losses. Last year, they paid out $1.7 billion for major disasters. This year, less than a third of that at just $558 million. And the report is clear. This was thanks to fewer severe weather events and, this is the kicker, a complete absence of hurricanes during the quarter.
So with that core insurance business just humming along, let's turn to that second engine we talked about, their massive investment portfolio.
First off, we just have to take a second to appreciate the sheer scale we're talking about here. Allstate is managing a portfolio of over $120 billion in total assets. That's a gigantic financial operation running right alongside their insurance business.
And what's really fascinating here is the quality of that portfolio. Look at this. Over 91% of their bond investments are rated investment grade. Now, in simple terms, that just means they're playing it safe. They're prioritizing stability over making risky, high-reward bets. And that relatively safe strategy, it absolutely paid off. It helped generate nearly $1 billion in investment income just this quarter. That's a 21% jump from last year, and it was boosted by higher interest rates and some really strong returns from their longer-term investments in things like private companies and real estate.
But it wasn't all sunshine and record profits. Despite this absolutely stellar quarter, the company's own report is very, very clear about the significant challenges that are looming on the horizon. Yeah, the report is pretty blunt about the challenges ahead. Things like global supply chain issues and tariffs are driving up the cost of pretty much everything, from car parts to lumber. And for an insurer, what does that mean? It means every single car crash and every home repair simply costs more to cover. So, How are they going to fight back against these risks? Well, their strategy, which they call transformative growth, really boils down to two things. First, sell more of their classic insurance policies to more people. And second, launch new types of protection services that go way beyond just cars and homes.
And all of this leaves us with the big final question, right? The numbers this quarter were, without a doubt, impressive. They were fueled by higher rates and, let's be honest, a lucky break from Mother Nature. But the real test will be whether Allstate's growth strategy can actually keep this momentum going in a world that's getting more and more unpredictable, with both economic pressures and climate volatility. That's the story we'll be watching.